Mr. Nirmal Jain now joins in from IIFL. Nirmal, hi, good afternoon.
Hi.
Your numbers look quite good, with some of your peers. What led to this kind of growth and what's the outlook for future?
So this year, all our business segments had good growth. So if you look at our numbers, then our broking, our financial product distribution, which comprises insurance products, wealth management products, and our financing business, all of them had a top line growth of around 30%, which has driven our bottom line growth by 60%. So these numbers you should see on the depressed base of a year before. So if in fact from 2008 till 2014, we did not have a consistent positive market for financial services. And I think that if economic activity accelerates as all of us expect, that macro numbers still haven't improved, and if that improvement happens in the next few quarters, then we can look forward to a sustained growth and further momentum in financial services performance.
Okay, Nirmal, hi, good afternoon and congratulations on a good set of numbers. We were speaking with Ramdev as well when Motilal Oswal delivered their numbers, and he was mentioning the same point that from a low base, these growth rates, look quite fabulous, but they're not sustainable as we head into FY16. But do you believe that FY16 will, as a year, be better than FY15?
I think FY16 should be a better year, and as far as we are concerned at IIFL, we have a fairly diversified and de-risked business model. So to that extent, I won't really fear that much of cyclical downtrend, even if we have a corrective phase in the market or market sentiment remains a little subdued for a little longer time. Because almost more than 70% of our income and profitability is driven by NBFC business, which is our non-banking finance or consumer finance business. There, I think we should benefit from the falling interest rate because most of our assets will be more or less fixed priced. So from that perspective, I think, and plus there is a demand for credit. Consumer finance is growing, and we have a distribution network, so that business should grow. And also the second most significant business that we have now is our wealth management business. That also has grown very well. In fact, wealth management by itself has reported profit of more than 100 crores post-tax. And broking profit is around, on a pre-tax, around 50 crore odd. There's the breakup. So I think in FY16, we do think that performance should sustain and we should maintain our growth. Growth rate, what will it be? I mean, I can't do really a forward-looking statement in that manner, but I think environment has improved for financial services, and if at all anything, I'll be an optimist and would think that it should further improve.
Sure. Nirmal, in fact, as we speak, the Nifty broke the 8,000 mark. It's really the fall has been crunching now. The bank Nifty is now down full 3 percentage points. The Nifty went below 8,000, has recovered a bit back above 8,000, but suffice to say that 8,000 has broken, and after a long time, we have seen a tick below 8,000. So in a matter of 3 months, we have seen 9,000 something, and now we have seen 7,000 something. So really quite damaging. Nirmal, what's leading to this big decline? There are multiple factors that we have discussed. Would you say that this is still a routine correction in a bull market, or is there a risk of a bigger correction, maybe even a near-term bear market?
I would say that, medium to long term, I would still think that we are in a bull market. And whenever market corrects, people will start talking about that, government is not doing much, or there's this mad problem, or they get all exaggerated attention from media and analysts. But to my mind, the correction is convergence of quite a few things. One is it all started with MAT notices, which obviously spooked FIIs, and in fact, in terms of timing also, it happened at a time which was not really appropriate. And apart from that, crude oil prices, if you really look at it, from bottom, they have moved up by 40–50%. So there was one significant macro positive, which, most of the analysts were trying to factor in. And on top of that, corporate earnings have been pretty dismal. In fact, financial services is one exception, but by and large, most of the large corporates haven't done well. It's a little mixed bag, but still, even IT companies are disappointed. And then there has been forecast of monsoon that it may be below normal this year. Politically, most of the bills are getting stuck, and in fact, land acquisition bill is one big one. And of course, we should look at the fate of GST in Rajya Sabha. but government is not able to maneuver the vote in Rajya Sabha, and that is what is actually worrying many people. This has also coincided with leverage positions in local market, as well as some of the hedge funds. At some point in time, their stop loss triggers and they start selling. So this market always has a tendency to move in a pendulum. When it's optimistic, it just moves to the euphoric high, and when there's a market go on a bit of a negative or a pessimistic, then everybody tries to jump off, and correction is very sharp. My personal view is that still it's a bull market, and if it corrects as steeply as it has done yesterday and maybe today or in the next few days, I would not be surprised if there are some long-only FIIs who come back to buy because they'll find valuations attractive. Whatever these things have happened about MAT or reforms that we are talking about, I don't think they've changed the fundamental story about India. It's just in that phase. We are right now, yesterday we saw more than 700 point fall. Today we are staring at 200 point falls, about 1,000 points in a matter of just less than 2 trading sessions. So obviously this is the time when everybody would feel and talk pessimistic. But I think it's more like a correction, and I would not worry too much from a medium-term perspective. In a way, it's healthy because market had a very run-up was also very fast. The corporate earnings will take some time to catch up, but the markets ran ahead of it. So it's just trying to take a pause, breather, and a step back, which is healthy from a medium-term perspective.